Today is Monday, August 9th, and this is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. Today's guests are Steve Freed, Vice President of Grain Research at ADMIS, and Alan Bush, ADM Investor Services Senior Financial Economist. Alan, let's start with the stock indexes this morning. What do the technicals say about the outlook for stock index futures?
Well, the technicals actually remain rather positive. We had every reason to decline in recent days with the talk of the Fed likely to do an early tapering. At least that's the feeling that we're getting or hearing. And yet stock index futures continue to advance. So just the fact that we could see new record highs in some of the indices late last week, I think suggests that there is more to come to the upside. And in fact, anytime any market makes a new historical high, often there is follow-through strength. And I think that will be the case again this time in the indices.
Alan, the gold market was sharply lower last night. Why did the gold market decline so much early Sunday evening?
Well, that is a very big mystery. I've seen very few reports as to why the gold broke so hard. Some of the reasons were really not worth repeating. They just didn't make sense. It also doesn't make sense why anyone in a 15-minute period at the most illiquid time of the day and of the week on a Sunday evening sell 24,000 contracts of gold representing 4 billion notional value in the gold. So making a trade at that time of day almost guarantees very poor fill. So I don't have an answer why so much was sold, just that it was, and it was very odd that it came at that particular time of the day and of the week.
Thanks. Alan, let's talk a little bit about the 30-year bond. Why is this market holding up so well in recent months when there is ramped up talk that the Fed will sooner rather than later introduce a tapering off its asset purchase program?
Well, I think many economists would like to see a stronger economy. And in fact, that is the case. The economy is firming. But I think with the bonds up almost 10 full points off of the May lows, that suggests that maybe some traders are not quite as optimistic as some economists about the economic global recovery. So even though there's all this tapering talk, the bonds are saying that the tapering will probably take place later rather than sooner. And possibly when there is the tapering, it may be a dovish tapering, meaning that the amount that is tapered is in very small numbers. So the bond market seems to be a better indicator of what's going on versus some of what we are hearing as far as the rhetoric on tapering.
Let's look at the grain market. Steve, we have a USDA report on Thursday. What is the market expecting the report to say?
Of the past, the USDA has been rather reluctant to change numbers, which has been bearish. We kind of hope that they lower the corn and soybean crop slightly. They will have, for the first time, farmer survey data, and we'll see if the farmer is optimistic about his crop, especially east of the Mississippi, and pessimistic west, especially in the northern plains. We expect them to lower world wheat production in Russia and Canada, and also the Brazil corn crop, which could raise corn demand and lower the carryouts. In general, the trade is looking for lower corn and wheat carryouts, but actually could show a slight increase in bean carryouts due to a lower U.S. crush and export number.
We're right up against resistance. Do you think prices will trade above the resistance levels?
Eventually, I do. I think that the market has seen a lot of fun activity, selling rallies, especially in corn and beans due to lack of new China trade from the U.S. and also the rains and talk of record yields in the eastern corn belt. But I think if we do lower carryouts for 21-22, both globally and in the U.S., prices will need to trade higher. There's a lot of strong resistance at around the 1350 up to 1360 and 1370, and the nearby soybeans, I think, will push through that. If we have a yield below 50.8, we could see $16 beans eventually. Same thing in corn, a lot of resistance between 555 and 570. A trade over 580 and 590 could suggest $7 corn futures. And if we look at the Kansas City wheat market and the drop in global supply, especially from key exporters, some people are looking for something over 850 in Kansas City wheat futures in February of 2022.
Steve, there was a UN climate report, an interesting one that came out. Is there any reason or any connection with why energy, corn, and soy oil prices are lower today?
I think there's a strong correlation between that because the UN came out with very strong wording that said humans are responsible for climate change. They're talking about more droughts being more frequent, maybe instead of one every 50 years, one a decade. They're also talking about increase in water levels globally. And they're also talking about more fires as we're seeing across the globe. The problem is our weather guy and most other weather type experts don't agree with the climate being responsible for all this. But it could cause Congress to attack fossil fuels and go to more green energy. I think that there are those, though, that believe with 2 billion more people in the world in the next 20 years, that's an increase of the size of the U.S. every 5 years. We're going to need fossil fuel along with all energy sources to satisfy that population.
Well, thank you both. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.